Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. Nuvama Wealth and Investment pumps 100 crore rupees in Oyo through a secondary sale. Sources said this funding values the hospitality major at $4.6 billion. Oyo is looking to raise another 200 crore rupees via secondaries and is in talks with potential investees.
Deal volume picks up on Startup Street. Over $630 million come in the first 13 days of December. Investors have pumped almost $11 billion in 2024 so far, as per data from Venture Intelligence. Interestingly, family offices poured in over $1.4 billion.
The stage is set for over 25 startups to head to the Lal Street next year. The big ones include Zetwork, Meesho, Urban Company, Bluestone, Pine Labs, Aether and many more. 2024 saw 12 IPOs from the startup world.
Bitcoin prices hit a new record high as investors await a potential rate cut from the US Federal Reserve later this week. The cryptocurrency has rallied 50% since Donald Trump won the US presidential election.
Supreme Court orders that all 24 pleas related to alleged anti-competitive practices by Amazon and Flipkart be transferred to the Karnataka High Court. The Competition Commission of India consents to this arrangement on the condition that proceedings before other high courts are also stayed.
Those were the headlines that we're tracking for you this evening. But on what's brewing today, Nuvama Wealth and Investment pumps in 100 crore rupees into Oyo through a secondary sale. Sources tell CNBC-TV18 the funding values the hospitality major at $4.6 billion. Oyo is looking to raise another 200 crore rupees via secondaries and is in talks with potential investees. Aishwarya Anand is here with more. Aishwarya, what are your sources telling you?
Nuvama Wealth and Investment Limited, formerly known as Edelweiss Securities, has acquired shares worth 100 crore in Oyo's parent company, Oracle Stays Limited, at 53 rupees a piece in a secondary market deal, sources have told CNBC-TV18. The funding values the hospitality major at $4.6 billion, and Oyo is now looking to raise another 200 crore rupees via secondaries at market prices between 53 and 60 rupees per share, and is in talks with potential investees, including Incred. Now, as per sources, these shares are being offered by Oyo's early investors, presenting an opportunity for partial exits while potentially introducing new strategic investors to the company's cap table. It's important to note, however, that even if the valuation has been rising, it is still far lower than the $10 billion that Oyo was valued at during its peak. We had earlier reported that founder and CEO Ritesh Agarwal is also set to invest 550 crore rupees to increase his shareholding in Oyo via his affiliate entity, Red Spring Innovation Partners. Sources had then told CNBC-TV18 that Agarwal is slated to buy another $60 million worth of shares from the company at 42.60 rupees per share, a 45% premium to his last purchase in August 2024. This additional funding will help in financing Oyo's recent acquisition of the US-based hospitality chain Motel 6 and Studio 6. Oyo turned a profit of about 132 crore rupees in the first quarter of FY25.
Thank you, Aishwarya, for those details. Appreciate you joining us. Also on what's brewing, Mumbai-based home solar startup SolarSquare has raised $40 million in its Series B funding round. The venture claims the funding marks the largest venture capital raise in the Indian solar sector. The round was led by Lightspeed with participation from Lightrock, existing investors Elevation Capital, Chris Saka's Lower Carbon, Nitin Kamath's Rainmatter and Gruha's PropTech also invested in the round. To talk to us about the road ahead, joining me now is Shreya Mishra, the co-founder of SolarSquare. Shreya, welcome to Startup Street. Now, SolarSquare is a full-stack residential solar brand that eliminates middlemen and does solar installations. Take us through your offerings. Also, how are you making it easy for families to make the switch to solar?
Absolutely. Thank you so much for having me here, Shruti. Like you said, we're a full stack brand, and solar is a very unique category, which unlike consumer durables is not a plug and play product like your television or a refrigerator. It's a full solution that goes to a customer's home. And so, being a full stack brand is very, very important so that we control the entire value chain. This includes, procuring over 70 components that go in a solar system, then designing it custom to each home, and each roof is unique in India. And then, taking care of all the government permits, taking care of high quality and safe installations, and then also helping consumers get financing or easy loans to go solar. And last but not the least, also taking care of the after sales for solar. So because solar is a new category, the solar revolution is just unfolding before our eyes. Every family being a first time buyer has a lot of buyer's anxiety because like I said, it's not a plug and play. So that's why being a full stack brand allows us to control the full value chain and give reliable solution to the consumer. I would say that there are three main things people look for. Number one is hassle free, solar journey. It can take up to 2 months for you to get solar start to finish. Secondly, reliable after sales and reliable performance. And last but not the least, safety standards.
Sure.
So we've innovated on everything in the value chain.
All right. You've also acquired over 20,000 homes and 200 plus cooperative housing societies as customers across India. Shreya, talk to us about your post-sale solar maintenance service that you were talking about. What kind of feedback have you got so far? And also elaborate on your tech edge.
Sure. So like I said, after sales is extremely important in solar because India is a very dusty country. And when the dust settles on the solar panels, it impacts performance up to 30-40% in just 6 months. SolarSquare has a natural edge in after sales service where, as the brand, we've actually introduced the concept of after sales in the residential solar market. This is a very fragmented industry where all the mom and pop installers were in the business of, install and then the consumer takes care of the after sales. But as a brand, we take responsibility of that after sales. We do monthly maintenance for the customer and their rooftop solar. Very much like your car and air conditioner requires regular maintenance. Solar requires a lot more in terms of panel deep cleaning, mechanical checks, electrical checks. So we take care of all of that, Shruti. And today we are the largest operators of distributed solar assets in India with, tens of thousands of homes and housing societies that are powered by SolarSquare. So we have dense after sales network, and we've also built an asset monitoring tech stack, which allows us to get real-time data on how much power is being produced on every single home and also diagnose issues and, solve problems when they occur.
Correct. Let's now quickly get to the fundraise, Shreya. You plan to use the $40 million raised to expand operations to over 50 cities from the current footprint of 20 cities. You also plan to invest heavily in technology, talent and brand building. If you could elaborate on each of these plans.
Absolutely. So unlike, your Swiggy, Zomato or quick commerce, which are top 20, 30 city businesses, solar is actually a grassroots revolution. Every home in every tier 1, tier 2, tier 3 city, even rural India will want to go solar. So as SolarSquare, we are still in just 20 cities across India. So barely scratching the surface of, just the market size that exists. And through these 20 cities, Shruti, we've already in the last 3.5, 4 years become the #1 residential solar brand in India. And we have disproportionate market share in every single city where we operate in. However, when you look at our market share in India, it's just a sliver. So the first thing we want to do is get into the top 50 cities of India. All the major cities we first want to get to. And of course, this is, like I said, it's a full stack solution, requires a lot of technology and operations excellence. So we're going to be investing in our, technology stack for installation, after sales, quality, all of that. And, as we expand, we also want to invest in branding. We have so far grown with very minimal investments in marketing and branding, but we do want to, we feel ready as a company to start branding and get our brands to more cities and more consumers. Okay,
you also plan to build a state-of-the-art asset management tech stack. I think you touched upon it for remote monitoring and diagnostics of residential solar systems. Tell us what kind of an impact will this have in terms of operational efficiency?
Absolutely. So Shruti, we're the only company in India which has launched a savings guarantee with solar. So we're not just giving a hassle-free installation experience to the customer, we're also taking responsibility of performance of solar thereafter. So we give a 5-year savings guarantee to the consumer. We're the only company in India to guarantee that, which means if there is any deficit in power production, Shruti, we actually pay back the customer. So in a way, it's like you're not just selling a car, you're giving guaranteed mileage. So we're not just selling solar, we're giving guaranteed savings. This is a first in India, and it is because of our asset monitoring tech stack and our dense customer network and dense after sales network that we're able to provide the right maintenance and have the right technology that allows us to deliver this. Without the technology, the cost of giving a savings guarantee can be very high. The liabilities of underperformance of the company can be very high.
Absolutely.
So this is, where we will, our asset monitoring tech stack will come in handy.
All right. One final question, if you would quickly answer that. Take us to your current business growth numbers. What is the current top line and the road to profitability looking like?
Sure. So I had come on this show exactly 2 years back during my Series A. We had 5,000 homes solarized at that time, and now exactly 2 years later, we have 20,000 homes, that are now SolarSquare customers. We are currently run rating over 400 crores, and our aspiration, as we expand into more cities and we invest in our growth with this round of funding, is to, get to 10 times that size in 4 years or maybe five. To your question of profitability, we're very close to profitability, Shruti.
Okay.
So, however, in the couple of months, we should hit our first, a PBT, neutral mark we should reach. However, as we've raised this funding, we're going to be investing again in growth. But with this round of funding, definitely the ambition is to get profitable in the next, 1.5 to 2 years.
All right. On that note, it's time for us to wrap up this conversation. Shreya, many thanks for joining us on Startup Street today, and keep transforming one rooftop at a time. Thank you so much.
Thank you so much.
On the hot seat today, healthcare startup CureBay has seen a growth of 8 times in gross merchandising value in the first half of FY25 versus the same period last year. Now, the firm's annual recurring revenue came in at 128 crore rupees and is on track to achieve 200 crore rupees by March of 2025. Joining us now to decode their growth numbers and talk to us about their future plans is Priyadarshi Mahapatra, the founder and CEO of CureBay. Priyadarshi, thank you so much for taking time out and being here with us on Startup Street. You are a hybrid healthcare platform transforming the last mile accessibility to high quality healthcare in underserved areas of India, right? You've recorded this 8 times growth in GMV during the first half of FY25 versus the same period last year. If you could sort of quickly take us through what led to this growth and where did you see the demand come from?
Thank you so much for having me on the show. The first thing that we tried to do was to see the full stack this country, not sell healthcare by part. So we tried to go deep into the market using a very innovative hybrid model, which allowed healthcare service providers to connect with us, leveraging our tech platform. And on the demand side, we created a network of clinics, which were all manned by trained and certified healthcare workers, nurses, and pharmacists who brought the human touch. In addition to this, what we did, we created a community connect by creating a network of what we call Swasthya Mitras, who were credible people from the local communities who extended our healthcare services to the doorstep of people. I think the secret sauce in our model was how do you leverage technology to get the supply side to participate to bring high quality healthcare services to the last mile? And how do you ensure that you connect with the local community so that you move healthcare in remote areas from just being a clinical service to a community-based healthcare service? I think that has been the cornerstone for driving this full stack healthcare journey for us.
That's your secret sauce, as you said. But you've reached this ARR of 128 crore rupees and you're eyeing 200 crore rupees by March of 2025, right? Are you on track to achieve this? What will drive this growth? And what about profitability?
Absolutely. I think, there was a myth that rural people don't pay. And we were absolutely clear that we're going to prove this is an urban myth. Rural has the capacity to pay if you bring them the right quality services and you make it accessible and affordable for them. So we have demonstrated that a model which is based on dignity of care and brings the right services at the right price, people are willing to pay for it. We are completely on track. We believe we will be hitting the 200 crore annualized revenue targets by March. More importantly, you spoke about profitability. That's a topic very, very close to my heart. We operate in a concept called Circle. Circle is a cluster of 50 clinics, and our oldest circle, which we operate in Orissa, is actually hit operating EBITDA positivity in September. And as a company level, if we don't invest into more circles, we will be operating EBITDA positive by March.
That's great. So by March, operating profitability is what you'll get if you don't invest in other markets. But India's rural healthcare market is a $45 billion opportunity, right? So you've taken us through the gaps that you've addressed, but what's the kind of impact you've created for India's rural healthcare delivery? And how affordable are you, considering rural India, like you said, is willing to pay for the right services?
Absolutely. I think today, if you look at close to 400,000 plus patients have received our services. More importantly, almost 70,000 have actually got into a subscription model with us. That means we are slowly moving the needle, not just attending to people who are either in the acute or chronic condition, but encouraging rural India to move towards a preventive journey. a journey which we haven't even seen in healthcare happen in urban markets. So this behavior change, along with the value systems that we're bringing into play, has clearly been driving our growth. And today, the impact that we've created on the ground can be clearly seen, because in our subscription base, almost 65% of them are coming back to us as recurring as their revenue, as their subscriptions are completing a year. So very, very strong traction we are seeing with the customers in the market.
So strong traction there for the customers in the market. But, if you could sort of give us a sense of your presence. You started, early on, you said Odisha, Chhattisgarh and Jharkhand, right, is where you're present in currently. How many states do you hope to be in by the end of, FY25? And are you looking to raise more funds?
So we are present in Orissa and Chhattisgarh now, and in fact, we're just planning to enter into Jharkhand. We believe we will be raising one more round. We're actually in advanced stages of conversation to close our Series B. Post that, we will be entering 3 more circles, which definitely Jharkhand is going to be one of those markets. Our plan is in the next 4 to 5 years to at least enter 6 states that we have identified and build a network of 800 plus clinics in 16 circles.
Right, so looking to enter a lot more states there from the 2 that you are currently in. All right, Priyadarshi, thank you so much for taking time out and being here with us. And we wish you all the best on these plans going forward.
Absolutely. Thank you. It's my pleasure.
Well, with that, it's time for us to head into a short break. But coming up, B2B and deep tech-focused venture capital firm Growx Ventures has launched its Fund 2 with a target corpus of 400 crore rupees. Details on the other side.
Welcome back. You're still with us on Startup Street. Now, Growx Ventures has launched a new fund. Ritu Singh is here with us. Ritu, you have Manish Gupta, the general partner at the firm. Tell us more about the new fund.
Well, B2B and deep tech-focused venture capital firm Growx Ventures has launched its Fund 2 with a target corpus of 400 crore rupees. It plans to write checks of up to 10 crores in seed rounds and up to 30 crores in Series B rounds. It hopes to back about 20 to 24 startups across sectors like semiconductors, defense tech, space tech, alternate materials and advanced manufacturing. For more on the investment thesis, I have with me Manish Gupta, who is the general partner at Growx Ventures. Manish, thanks very much for your time here on Startup Street. Start by telling us about the investment thesis of this new fund and how soon will you achieve its close and the investors you're raising this money from?
Yeah, thank you for the question. So the thesis is very simple. We are investing in early stage deep tech startups as well as growth stage B2B enterprise tech startups, right? Backing 10 to 12 pretty early stage deep tech, cutting edge, almost first in the world kind of companies and technologies at early stage, as well as going after the more mature growth stage companies that have, bypassed the journey, of building and pivoting and, iterating and have reached a more, a stable state. So that's, the thesis of the fund, 10 to 12 companies at early stage, 10 to 12 companies at, mid growth stage. We have, we are on the path of achieving our first close. Should be able to start investing, from the next quarter. And, investors are mostly individuals, family offices, a lot of people from professional backgrounds, consulting firms, global tech firms, Indian conglomerates across the board.
All right. Manish, this fund too has adopted a stage diversified strategy for a change from seed to Series B startups. Tell us about the idea behind this and the sectors or the themes that you're primarily going to focus on.
Sure. At early stage, we are going to focus more on, like I said, seed stage, pre-seed stage, pre-revenue, pre-product, pre-technology sort of, stage companies. We have a decade plus, a playbook there. We have access to the best of the startups. We know how to invest. We have to know how to source. We know how to, exit these companies. At Series B, like I said, I mentioned earlier, we feel, we want to invest when the companies are past that, the value of death, so to speak. There is a gap in Indian market of Series B as an investment, as an investor class. A lot of Series B investing is happening by global funds coming in India and investing, or, a little bit of Indian private equity funds are coming into tech and doing a little bit of fintech, a little bit of SaaS. But, very few people in India are looking at Series B as an asset class, and and very few people have a tech DNA. So we feel there is a bit of a gap area which we will fill up with that strategy. Now, we are sector agnostic across stages, but our focus is we don't do consumer at early stage. It's, like I said, pure emerging tech, hardware first companies, whereas at later stages we are broadly open to more B2B, more enterprise tech startups. Sector agnostic, but yeah.
Okay, in that case, how soon will you start deploying the money after you achieve the close? And is there anything that is already in the pipeline in visibility? And also, number two, what are your return expectations from this fund?
We're looking to deliver 30 to 35% net IRR to our investors. Something similar to what we have done in the first fund one. In terms of deployment, we are in advanced stages, stage of discussions with technical DD with a few startups in, defense tech, biotech, space tech, and we should be able to finalize at least one or two of deals in the next quarter.
All right. Since 2012, we believe Growx has made about 46 investments. Give us a sense of the kind of exits you have lined up from this portfolio, if any of your companies are looking to go public anytime soon.
Yes, some of the companies have, public listing plans. They should be going public in the next 2 to 3 years. I think 4 to 5 companies should be doing that. As well as, we have had multiple exits from the previous funds. We have close to 8 exits from the previous, deployments, and we are probably looking at some more exits in the coming quarter.
And any names to share from these companies, Manish?
No, we would like to, share this at a later point.
All right. Before we let you go, since we're nearing the end of the year, what are the trends that you're most excited about and you're going to be watching out for as the new year starts?
No, so, we are excited about, cutting edge technology being built by Indian founders, and we are very bottom up. So we react to what the founders are building. When we invested in back in AI in 2014 or drones in 2016 or space tech in 2018, we always reacted to great founders building great technology from bottom up. It's very hard for us to, do that prediction, because, by definition, deep tech is something that has not been done before.
All right, we're all up on time, so we're going to leave it at that. Manish, thank you very much for joining us here today on Startup Street, and we wish you a very happy new year.
With that, it's a wrap from Arundhati and me, Shruti, on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.